friends. Today we are going to discuss the second chapter of accountancy of class 12th, accounting for partnership basic concepts. Today in this video we'll discuss about interest on drawings. Drawing is the amount basically withdrawn by the partner for his or her personal use from the firm. As we know, business and businessmen are two separate entities, so a business can charge interest on this amount that has been withdrawn by the partner for his or her personal use from the firm. Now, whether you are going to charge interest on drawing from the partner or not, it depends on the situation. Like if it is not mentioned in the deed, then no interest on drawings will be charged from the partners. Second, if it is mentioned in the deed that a specific rate will be charged as interest on drawings, then by that specific rate you are going to charge interest on drawings from the partners. And basically this interest is being charged from the partners just to avoid the excess withdrawn of amount from the firm by the partners. Is basically to discourage the withdrawn of excessive amount from the firm. Now there can be different situations, and under those different situations we have to calculate interest on drawings. Now we'll discuss them one by one. When fixed amount is withdrawn every month, it means that a fixed amount or a even drawing has been made every month. Like for example, a partner A withdraws rupees 1000 every month. So like for example, we take a example of calendar year. So that individual will make a withdrawal on January 1000, February 1000, Feb 1000, March 1000, April 1000, and so on till December. He will make the withdrawal of 1000 rupees every month. And under this situation, we can have different sub situations also, like when the withdrawn or when the fixed amount is being withdrawn on the first day of every month. So what will happen under this situation? In this situation, like if we take the example of the text, it has been written, Ashish withdraw rupees 10,000 per month from the firm for his personal use during the year 31st March 2017. So as per this example, this individual is going to make equal withdrawn of amount in the beginning of each month. So the first withdrawn that will be made by this individual will be on 1st April 2016, rupees 10,000. Then 1st May 10,000, 1st June 10,000, 1st July 10,000, 1st August 10,000, and so on. For the complete year, he is going to make a withdrawal of 10,000 in the beginning of each month. In continuation, he will make the withdrawal on 1st Jan 2017. Then he will make the withdrawal on 1st Feb 2017, and the last withdrawal that will be made by this individual will be on 1st March 2017. So in total, this individual is going to make a withdrawal of 1,20,000 rupees, because in the beginning of every month he is going to make a withdrawal of 10,000. So this 10,000 will be multiplied by 12 and it will give you 1,20,000. So the total drawing that will be made by this individual will be for the complete year will be 1,20,000. Now the formula for the calculation of interest on drawings by the alternate method is total drawings in a year into rate upon 100 into 1 by 12 into average period. Now the question arises, how you are going to calculate your average period. If the drawings has been made on the first day of every month or at the beginning of each month, then the average period, the formula for calculating your average period is total periods in months plus 1 divided by 2. Total periods in months means you have total months in a year is 12. Then you will add 1 to that and it will be divided by 2. So 12 plus 1 divided by 2, it means your average period for the withdrawal if made on the first day of every month will be 6.5 months or 6 whole 1 by 2 months. So you have to remember this because it can be asked in the board examination under 1 mark. Now, putting this average period in the formula, you will calculate your interest on drawings. Now it will be interest on drawings, as I have told you the formula, you can note down. Interest on drawings interest on drawings is equals to total drawings in a year into rate upon 100 into average period into 1 by 12. So by putting the values in this formula, you will get your interest on drawings. So as per the example, 1,20,000 is the total drawing that has been made during the year, into 8 by 100, that is the rate, into 13 by 2 means 6.5 is the average period, into 1 by 12. So with the help of this, you are going to get your interest on drawings. So as per this example, it's coming 5,200. Now your condition number or sub condition number 2, when the amount is withdrawn at the end of each month. So here it has been written the amount is withdrawn at the end of each month. It means that here the first drawing will be made at the end of that particular month. Like for example, if the withdrawal has been made in the month of April, so it will be done on the last date of April. Then May, it will be on the last day of May, June, last, and so. So here the last drawing that will be made will be on 31st March of that particular year, or basically if it is a financial year, then it will be of the next year. So this is how the drawings will be made. Like your first drawing will be on 30th April, then in continuation your drawings will be made. Now as I've told you that first drawing will be made on 30th April, then on 31st May, then on 30th June, then on 31st July, then 31st August, 30th September, then 31st October, then 30th November, then 31st December, then 31st Jan, then if it is a normal year then 28th Feb, or else it will be on, if it is a leap year then it will be on 29th Feb, and the last withdrawal will be made on 31st March. So this is how the drawings will be made during that particular year. Now the average period for the this condition will be total period in months minus 1 divided by 2. As we know, it's a complete year, so your total periods in months will be 12 minus 1 divided by 2, it will come 5.5 months. So it also can be asked in a board exam, what will be the average period if the drawings had been made at the last day of each month. So your answer will be 5.5 months. Now you will put the figures in the formula. Formula is interest on drawings is equals to total drawings in a year into rate upon 100 into average period into 1 by 12. So as per the question, your total drawings will be 1,20,000 because 10,000 has been withdrawn on last day of each month. So whether it has been made on last day or first day, that month will be taken into consideration. So as per the formula, you will get your interest on drawing as 4,400 rupees. So this is how you are going to calculate interest on drawing if withdrawal has been made on the last day of each month. We are talking about equal drawings or even drawings. Sub condition number C, when money is withdrawn in the mid of the month. Now in case if the withdrawal has been made in the mid of every month, so the withdrawal will be made in the mid of the month. Like the first withdrawal will be made on 15th April, then 15th May, 15th June, 15th July, 15th August, 15th September, 15th October, 15th November, 15th December, 15th January, 15th of February, and 15th of March. So this is how the drawings will be made, and equal drawings will be made in the mid of every month. Like on 15th April, the withdrawal will be of 10,000. On 15th May, it will be of 10,000. Then June, 15th June, it will be of 10,000, so on. For the complete year, it will be 10,000 in the mid of every month. So the last withdrawal will be made on 15th March of the next year. So the complete drawings for the, or you could say the total drawings for that particular year will be 10,000 into 12, that is 1,20,000. Now the formula for calculating the average period if the drawings has been made in the middle of every month or equal drawings has been made on the mid of every month. So your formula will be average period is equals to total period in months divided by 2. So here total months or total period in months is 12, divided by 2, it will come 6 months. Now you will put this in the formula. Interest on drawings is equals to total drawings in a year into rate upon 100 into average period into 1 by 12. So you will get rupees 4,800 as your interest on drawing. So this is how you are going to calculate interest on drawings when the withdrawal has been made in the mid of every month. So equal drawings every month, you may have 3 different conditions. Now in the same way, you can be asked in boards when fixed amount is withdrawn quarterly. Now under this condition also you have sub conditions. A, if amount is withdrawn at the beginning of each quarter. Now as you know, in a year you have 4 quarters and basically have 3 months. Like one quarter will start, if you talk about the first quarter of financial year, it will start from April. Clear? So April, May, June will be your first quarter. July, August, September will be your second quarter. October, November, December will be your third quarter, and January, February and March will be your fourth quarter. So basically we have 4 quarters of 3 months each in a financial year or in a year. Now under this situation, if equal drawings has been made at the beginning of each quarter, so the first withdrawal will be made on 1st April, as per the example on 1st April 2016. Like as per this example, 30,000 has been withdrawn quarterly. Clear? And interest rate is at the rate of 8% per annum. So here the withdrawal will be made on 1st April 2016 of 30,000. Then the second withdrawal will be made on 1st July 2016. Third withdrawal will be made on 1st October 2016. And your fourth withdrawal will be made on 1st Jan 2017. So as per the text you can see. Clear? Now here you have been given with the time period. Like how you are going to calculate this time period. Now if the withdrawal has been made on 1st April 2016, from 1st April 2016 till 31st March 2017, your time period is of 12 months. How? April, May, June, July, August, September, October, November, December, January, February and March, because it is beginning of the quarter. So on this particular amount, if you are calculating it on time period basis, so you can calculate for 12 months. Then if the withdrawal has been made on 1st July, so from 1st July till 31st March of next year, you have 9 months. So the time period will be 9 months. Then from 1st October 2016 till 31st March 2017, you will have 6 months. And from 1st Jan 2017 till 31st March 2017, you will have 3 months. So you can calculate your interest for the respective time period. Now this is how you can calculate your interest on drawings if the withdrawal has been made on the first day of each quarter. Now if you can apply the alternate formula also, which we have already discussed in your or the above example. So here the average period will be, average period is equals to 12 plus 3 divided by 2. Why you are taking 3? Because we have 3 months in a quarter. So total months, clear, plus 3 divided by 2. So it will come 12 plus 3 divided by 2 means 7.5 months. So the average period for the calculation of interest on drawing, if the drawing has been made on the first day of each quarter, so it will be 7.5 months. So you can put the figures in your formula. So interest on drawings will be total drawings in a year, as 30,000 has been withdrawn on every quarter, or you could say 30,000 rupees has been withdrawn on each quarter. So as I have told you that there are 4 quarters, so 30,000 into 4 means 1,20,000 rupees will be withdrawn for the complete year. So 1,20,000 into rate, that is 8 upon 100, rate is 8%, so we will write 8 by 100 into, as I have told you, the average period will be 12 plus 3 divided by 2, that is 7.5 months. So you will write 7.5, or you can write 15 by 2 into 1 by 12. So this is how, with the help of alternate formula, you can calculate your interest on drawing when the drawings are being made on first day of each quarter. So it's coming 6,000 rupees. B, if the amount is withdrawn at the end of each quarter, so what will happen here, that you are going to make the withdrawn at the end of each quarter. As I have told you, your quarter will start from April and it will end till 30th June. Then the second quarter will start from 1st July and it will end on 30th September. Then the next will start on 1st November and it will last till 31st December. The next will start on 1st Jan and it will end on 31st March of next year. So here the amount is withdrawn at the end of each quarter. So we are talking about end of that quarter. So as I've told you, it will start from 1st April and it will last till 30th June. So the first withdrawal will be made at the end of that particular quarter, and the end of that particular quarter is 30th June. The same way, the end of the second quarter will be of 30th September, and the end of the third quarter will be 31st December, and the end of the last quarter will be 31st March of the next year. So when the amount is withdrawn at the end of each quarter, so the first withdrawal will be made on 30th June, as per this example, on 30th June 2016. So 30,000 rupees has been withdrawn, clear, at the end of each quarter. So here the first withdrawal will be made on 30th June, second on 30th September, third on 31st December, and the last will be on 31st March. Now the time period from 30th June till 31st March will be of 9 months, because it's 30th June, so we will not count June. Will calculate from July, August, September, October, November, December, January, February and March. So it's coming 9 months. From September 30, so we will not take into consideration September. We will start from October, November, December, January, February, March. So it's coming 6 months. From 30th December, we'll calculate from January, February, March. So it's coming 3 months. And if the withdrawal has been made on 31st March and you have to calculate interest from that particular year only, so from 31st March till 31st March, 0 months. So this is how you are going to calculate your time period. So respectively, you can calculate your interest for that particular month, like 30,000 into 9 by 12 into 8 by 100. So this is how individually you can calculate the interest on these amounts, and you will total it, you will get the total interest for that particular year. Alternate formula that can be used here, clear? As I've told you, interest on drawings into total drawings in a year into rate upon 100 into average period into 1 by 12. Now when the withdrawn has been made on the at the end of the quarter or at the end of each quarter, so here the formula for calculating your average period will be total months in a year, ठीक है, minus 3 divided by 2, that is 12 minus 3 divided by 2. So it's coming 4.12 minus 3, that is 9. 9 divided by 2, that is 4.5 months. Clear? So interest on drawing will be total drawing, as I've told you, 30,000. Though the last drawing has been made on 31st March, still 31st March is the period in the financial year. So you will also take the last call also, or the last amount also. So the total drawings will be 30,000 into 4, that is 1,20,000 into 8 by 100 into 4.5 or 9 by 2 into 1 by 12. So this is how you will get your interest on drawings for that particular quarter also. Though it's not given in your text, even the drawings can be made in the mid of each quarter. So for that, the first time will be like, as I've told you, the first quarter will start from 1st April and it lasts till 30th June. So the mid will be April, May. So 15th May will be the first day. Clear? Now the first withdrawal will be made on 15th of May. Then the second withdrawal will be made on 15th of August. Then third withdrawal will be made on 15th of November. Then the last withdrawal will be made on 15th of Feb of the next year. Now if we take into time period from 15th of May till 31st of March, you will have 10.5 months. From 15th of August till 31st March, you will have 7.5 months. From 15th of November till 31st March, you will have 4.5 months. And from 15th Feb till 31st March, you will have 1.5 months. So this is how you will calculate your time period. And respectively, you can calculate the interest for those time periods. Like for the first, clear, 30,000 into 8 by 12 into 10.5 divided by 12. For the second, you can calculate it 30,000 into 8 by 100 into 7.5 by 12. For third, you can calculate it 30,000 into 8 by 100 into 4.5 by 12. And for last, you can calculate it 30,000 into 8 by 100 into 1.5 by 12. Or alternatively, you can calculate it, and the average period for the alternate method will be, clear, that will be 12 divided by 2 and it will come 6 months. So alternately, you can use the formula. Total drawings will be 1,20,000 into 8 by 100 into 6 into 1 by 12. So with the help of this alternate method, you can calculate your interest on drawings if the withdrawn of the withdrawn has been made in the mid of each quarter. Now what if the drawings are made at different intervals, clear, or different amounts has been written on different intervals? So under that particular situation, you have to calculate interest on drawings for those specific period of time. Like as per the example in the text, it has been expressed. Sahanaj withdraw the following amounts from her firm for personal use during the year 31st March 2017. Calculate interest on drawing by product method if the rate of interest is to be charged at the rate of 7% per annum. You have been given with the dates, like on 1st April 2016 she has withdrawn 16,000. On June 30th June 2016 she has withdrawn 15,000. On October 31st 2016 she has withdrawn 10,000. On December 31st 2016 she has withdrawn 14,000, and on 1st March 2017 she has withdrawn 11,000 rupees. Now if different amounts has been withdrawn at different intervals, so in this situation you have to apply product method. Under product method, clear, you have to take into consideration from on which particular date the amount has been withdrawn till the last of that financial year. So we have to take into consideration that whole time period. As per this example, like the drawing has been made on 1st April 2016 of 16,000. So from April till 31st March, clear, you have 12 months. April, May, June, July, August, September, October, November and December. So what you will do in your product method, clear, the format that has been given to you, the first form, the first column will be of date of withdrawal. Second column will be of amount, means the amount that has been made on that particular date or the amount that has been withdrawn on that particular date. The third column will be of time period, means as I've told you, if the withdrawing has been made on 1st April, so till 31st March the time period will be of 12 months. Then the last column will be of product. So what you will do, your product will be the multiplication of amount column and time period, or could say your amount will be multiplied by your time period. So this is how the product method is being done. Now the first withdrawal has been made on 1st April 2016. It's of 16,000 rupees. As I've told you, from April till 31st March you have 12 months. So for getting a product, what you will do, 16,000 into 12, and it's coming 1,92,000. Then the second withdrawal has been made on June 30th 2016 of 15,000. So the withdrawal has been on 30th June. So we'll start from July, August, September, October, November, December, January, February, March. So it's coming 9 months. So get time period will be 9 months, and to get the product, what you will do, you will multiply 15,000 by 9, it will coming 1,35,000. Then the third drawing has been made on 31st October. So you will start from November, December, January, February and March. So your time period will be of 5 months. Product will be 10,000 into 5, that is 50,000. Then the next withdrawal has been made on 31st December. So from 31st December you will calculate for January, February, March. So it's coming 3 months. So your time period will be of 3 months, and the product will be 14,000 into 3, and it's coming 42,000. Then the last withdrawal has been made on 1st March 2017 of 11,000. So your time period is of 1 month, means from 1st March till 31st March you will have one complete month. So product will be 11,000 into 1, that is 11,000. Now what you will do, you will total the product, means you will total 1,92,000 plus 1,35,000 plus 50,000 plus 42,000 plus 11,000. So with the help of this you will get your total product, clear, and the total product is 4,30,000. Now you can put this value in your formula. While calculating your interest on drawing with the help of product method, your formula is total of product, interest on drawing, you could say interest on drawings is equals to total of products into rate upon 100 into 1 by 12. Again I am repeating the formula. Interest on drawings is equals to sum total of products into rate or rate upon 100 into 1 by 12. So as per this example, your total of product is 4,30,000 and the rate is 7% into 1 by 12. So this is how you can calculate your interest on drawings when the drawings are of unequal amounts or at different intervals. So this is how you are going to calculate your interest on drawings when different amounts has been withdrawn on different intervals. Now, from the numerical point of view, this situation, as you can see in your text, when dates of withdrawal are not specified, it's very important. Now, what do you mean by withdrawal or when the dates of withdrawals are not specified? It means you will be given with the amount of withdrawn that has been done by that particular partner in that particular year, but the date on which it has been made will not be given in the question. Like for example, it has been written in the question, A has withdrawn 10,000 rupees during the year. So it has been stated in the question that 10,000 rupees has been withdrawn, but it's not mentioned on which particular date it has been withdrawn. So now the question arises, for how much time period you are going to calculate the interest on that particular drawing. So whenever you have been given that particular amount has been withdrawn and date is not specified, in that situation you will calculate it for 6 months. So the time period will be deemed to be 6 months, or you can deem it that the equal drawing has been made throughout the year. Like for example, if 12,000 has been withdrawn by that particular partner in a year, but the date is not specified, so you will assume that in the mid of every month 1,000 rupees has been withdrawn by that particular partner. And as I've told you, whenever drawings have been made, equal drawings has been made in the mid of every month, your average period will be of 6 months. So whenever withdrawal amount is given but the date is not specified, you will take your time period for 6 months. So in that situation, your interest on drawings will be clear, total drawings in a year into rate upon 100 into 6 by 12, means you are going to calculate interest on drawings for an average period of 6 months only. And this is very important consideration for your numerical part. Children used to make lot of mistakes while dealing with this situation. Whenever they have been given with the drawings uh, for that particular year, they used to calculate for the complete year. So you have to take in your mind, or you have to remember this concept in your mind, that whenever dates are not specified, you are going to calculate for just 6 months. So if rate is 10%, clear, and the amount is 10,000, for example, the amount is 10,000, the rate is 5%. So directly you're not going to calculate 10,000 into 5 by 100, clear. So this is the mistake that is basically being made by the students in the boards. So what do you have to do? 10,000 into rate, that is 5 by 100, into 6 by 12. So this is how the interest on drawings will be charged when the date are not specified. So this is what all in your interest on drawings. Hope you like the video. Thank you.